Everybody, another geopolitical analysis video diving into the markets. Today I want to talk a little bit about hedging. I want to talk about a good trade that could be a good opportunity to hedge some of the volatility that we might be facing coming into the new year. I think that the markets are posed for a bigger move up. I see a pretty interesting consolidation on the SPY over here. IWM, pretty interesting consolidation, rapid move up, V-shaped recovery. Like I told you a few days ago, I think the IWM is posed for much greater levels. But this is not a coincidence. We have to look at convergences, we have to look at correlations, and here we're seeing a very interesting correlation that is somewhat breaking. And what happens is that typically in the market, when you have something that is correlated with another asset or interest rates or currencies, and you see that is somewhat tilting, that is an indication that a strong move is coming. So in this situation, I'm very interested in seeing what happened with the rates. Let's look at the 10-year. So the 10-year over here had a significant rally, very interesting sharp bounce, and these are counter trends, right? This doesn't mean that we're going, pardon me, that we're going into higher levels again. But what happens is that when you're in a bear market of something, there's always going to be sharp bull moves, and if you're in the bull market, you're going to have sharp corrections. That's the name of the game. Okay, you always get the as above so below type of movement. It happens in everything, right? Even during the summertime, you get some days that are very off with like rain and even cold in some areas at night. And this happens in nature overall. It's a very interesting law. But anyways, looking into the interest rates, we saw this bounce here, and the IWM didn't really flinch. Like, sure, it had a drop, but look at it. It did a counter rally against the interest rates increasing, which this to me is very interesting. It signifies a potential move. So it's defying the interest rates going higher, meaning that essentially it's calling its bluff. And we're seeing that with the SPY as well. Despite interest rates spiking a little bit, uh, we're, we're seeing that the markets are maintaining they're maintaining the levels. Now, I do think that until we take off this level here for the SPY, we're going to be under these levels trying to consolidate. So this is good that we're consolidating. So at some point, if we break out to new all-time highs, I think that the ceiling is just going to move much higher. That one thing I want to talk about hedging is over here at the VXX. The VXX is in a very low territory, the lowest it has ever been. Now this is the VXX vehicle. It's not the VIX, but it represents the VIX. This is a Barclays vehicle, a Barclays asset. Looking at this shows that the we're at typically risk off right now. Risk off. Risk on. The fact that the VXX is so low, it's never been this low before, is very interesting. I think this would be a great opportunity to start to accumulate a little bit, because the fact that it's dropped so much is something that could indicate potential downside. Okay, I know that I'm saying that the markets are consolidating for higher, but if you want to hedge, it's good to keep the VXX available, to have some money in the VXX, and take advantage of these bounces, because whenever we see the VXX spike, okay, like for instance Monday, November 17th, let's take a look at where the SPY was November 17th. Look, the markets had dropped quite a bit, right? They were correcting, and that's when the VXX spiked, okay, on November 17th. So what I'm saying is that if we see in these markets another correction, which is possible, right, guys, because we're consolidating here. This is the weekly. If we consolidate over here, then we might have a good opportunity to pick up VXX here at the lowest levels. I think this is a good opportunity to be able to hedge a little bit. I'm not somebody who typically hedges, but I think it's a good opportunity right now to do so, especially if you've been in very risk on assets like Bitcoin, the miners, or other technology stocks. I want to see a little bit how the banking stocks are doing. So JPM has been doing very well. I mean, it's very close to its all-time highs. It's consolidating here, which is interesting because it's showing, typically bank stocks show strength in the market when they're doing well. So this is a good sign. But overall, I think if we look at the SPY and the Russell, we have more to go. I like this recovery here. This bottoming tail is very interesting. We see it often, like I've noted in other videos, and this V-shaped recovery is very bullish. So I do think that this is a great opportunity to get in if you're not in already. Let's look at silver. I like what silver has been doing. Amazing breakout. We talked about that. Now it's in this process of consolidating. We might see a little bit of correction, just small pullbacks. I know that there's a lot of disruptions with physical metals in terms of the CME. I know that JP Morgan actually made unavailable certain amounts of it. But the reality is that in any market, sure, we're going to go much higher. I do think that we should be in the 60s soon and then see a correction. But at some point, you have to have a correction. Nothing goes up in a straight line, guys. So even though some people are calling for 200 or 150, which is very possible with silver, I think it's still a little bit too early, and we just got to be a bit patient there. Same as gold. I really like what gold did. Gold is very interesting here because we saw that it's been respecting this trend line, okay? So this trend line here was touched. Okay, I've had this trend line for a while. So the fact that we bounced here, came down, broke out of this trend line, came back and almost touched it and bounced back is very bullish. It's very good. So that means that in the next coming days to 2 weeks, I would suspect that we see something like this. That we just do a move like that and we reach all-time highs. Double tops. So if the double top holds, which most certainly that's 90% of the case, that's what happens with double tops, then we might see another correction down, a 1-2 for much higher. But I do think now with the interest rates dropping, it's going to be very interesting to see how markets and metals will react. I think we'll be in this environment where everything will be going up. We'll have the bonds do a minor rally. We'll have assets, stocks, etc., precious metals rallying. The dollar, although to me it looks like it's going to go much higher, not in the short term. So this move here negated the potential move higher that I thought was going to happen. But again, I have noted that I think we're going to have to consolidate these levels here before a major breakout. Once the U.S. economy gets into a recession, and I think once the economy starts to break, that's when the flight to safety is going to be the dollar. It has always been the case. I don't think that the dollar is going to lose value that much. I think that we need another we're going to have a drop and then we're going to have an increase in the US dollar, and that's going to affect the markets, of course, and everything else. Let's see. It's going to be interesting to see what's going to happen in the next coming months, but this is what I got for you guys so far. I hope you enjoyed the video. Like, subscribe, and comment. Thank you. Bye for now.